now we're dying as a system, as a national economy. I think we're dying as a nation.
This video is brought to you by Reluctant Preppers. Click here to subscribe for free to reluctantpreppers.com. Hey everyone, this is Elijah Johnson with FinanceandLiberty.com, and back with us today is Jim Willie, editor of the Hat-Trick Letter found on GoldenJackass.com. Jim, thank you so much for joining us today.
Oh, it's a pleasure. We're finally in the end game.
Right, and I know we've talked a lot about the death of the dollar, and you've recently stated that there's an assault on anything and everything to support the dying U.S. dollar. Did you want to start us off by talking a little bit about this?
Yeah, well, look what's happening to gold. It went under 1,200. Look what happened to crude oil. It's threatening 90. Look what's going on with the foreign currencies. We're around 125 for the euro. All these different instruments, all these different vehicles that are in, how do you say, opposition, negative correlation with the dollar are all being put down, pushed down, really smacked down, slammed down. And it's lifting the dollar to give it life, but in a bad way. I've got a funny phrase that I've been using for 3 years, Elijah. The dollar will, in the very end, the dollar will rise and rise and rise some more and finally die. The fact that it's rising so sharply is not a sign of its strength. It's a sign of its imminent death. But a big question is, who's doing this? How is it being done? Well, I believe it's done in two major places. The Chief Investment Office of J.P. Morgan. That was the site of the London whale with his interest rate swap derivatives used in a huge way to support the treasury bonds with artificial demand, all of which they lied about, both in the volume. It wasn't 1 billion, it was about 9, maybe 100 billion in loss. And that's why bankers are flying out windows, because they don't want them to testify as to the losses that would undermine the treasury bond prestige, not that it has any left. The second office is the U.S. Department of Treasury and their Exchange Stabilization Fund. It's hard to imagine an office with more power than the Exchange Stab Fund, because it's involved in almost every market of the world for interference. So they've got a U.S. dollar platform that's built upon QE, the bond monetization, unsterilized. They've got the various delusional platforms, foundation system is a better word, of what I call the whirling dervish of derivatives that spin so fast that they appear to have mass. You really, at this point, you have the treasury bonds supported by interest rate swaps, and the entire world outside of North America and Western Europe in the process of abandoning the dollar. So the U.S. dollar is causing tremendous problems around the world, and most participants, most big commercial players, the trade partners, the large nations of the world in the global economy, they realize we're in an end game here, Elijah. This is I think, noting the beginning of tremendous changes coming to most financial markets, but led by gold and silver. I noticed a client of mine sent me a chart this morning. It's a long-term 20-year chart on gold. And we're at a long-term support line here. And those Elliott wave folks out there, I mean, there's some merit to that theory on technical analysis of charts. It shows a very big impulse down move, multi-year impulse down move, and I think it's concluding around now. There's a lot of talk that 1,200 is the firm absolute bottom, and I think there's a lot of merit to that. I think the Chinese have pretty much had enough mean, the Chinese are fed up. So we're in the end game here, Elijah.
Exactly. And just as you explained in your recent article, monetary policy is killing the system, you said that basically the Federal Reserve has no other choice but to continue indefinitely with zero interest rate policy and inflating away the dollar through quantitative easing.
Yes. In 2009, when they brought down the interest rate to zero, which I forecasted in advance, I said that after Lehman, we're going to go down to zero, and we did. When we got to zero, I mentioned that it's going to be forever. And Greenspan always thought, no, it's usually for 3, 4, 6, 8 months, and that's about the limit. You can't do that. Okay, I said, well, we're going to do it forever. I was called crazy, and here we are 4 years later, 5 years later, and it's still zero. In 2011, we got QE to infinity. I said when we first got it that it would be with many, many different stages of additional QE steps. And we had QE2, QE3, Operation Twist, and then the lies behind taper talk, which I called lies all summer long in 2013. And by September, that was proved correct. So now we have QE to infinity and a lot of justification going on as to why it must continue. So we have the U.S. government debt supported and financed by QE with unsterilized bond monetization. And a lot of people still wonder, what do you mean by unsterilized? Well, they're putting in 80 or 100 or 200 billion a month into the financial sector, and they're not removing anything. If they removed it, it would be sterilized. But by not removing it, it's unsterilized. The big banks are dependent on this 0%, Elijah. They cannot get away from it. They've got lots and lots of carry trade, which means they borrow the 0% on the short end and they invest in the bonds on the long end at 2 and 3 and whatever percent. And they put on leverage with the futures contract. Well, they can't get out of them. If the Fed raises interest rates, it's going to destroy the big banks in 2 ways. First, it's going to force them to unwind their carry trade with tremendous losses that gather at accelerating speed and what they call convexity. Their actual sales start feeding on themselves, and before you know it, the Fed will lose control. But the second way it would destroy the system is you raise interest rates and you take away the interest rate derivative feeder system. And its input is the free money. You can't take away the free money on the interest rate swap derivative. Otherwise, you remove the fabricated demand for the long-term bond. So they're stuck. They can't do anything about it. They're stuck at zero, and they're stuck at monetizing the bond, and they're stuck until they break the whole frickin' system, which is what is happening now. There are no significant buyers for the U.S. government debt. So they must keep the QE. It's the only buyer. The derivative accidents, I think, would come very quickly. Fast rising treasury yields would come very quickly. Massive stock declines would come very quickly. I think the U.S. economy would implode if they took away QE and 0%. So this whole clean financial engineering system is a massive failure. Massive. We bragged about it in the 1990 decade, and now we're dying as a system, as a national economy. I think we're dying as a nation. Look what's happening with all the, craziness. War to defend the dollar, last resort of spreading Ebola, which the Center of Disease Control in Atlanta has a patent on. A patent? It means it's fabricated. It's a super virus. There's money to be made in this death. Anyway, I'm getting carried away. But it's all pointing that this stuck policy is forcing a breakdown in the system that's evident in the money velocity and money supply contrast.
And so what is your perspective on the Fed is currently officially only printing $15 billion per month, but I know a lot of my guests say that that's probably, what the Fed officially says and what they actually do probably isn't the same, so they're probably printing a lot more. Would you agree?
Well, yeah, they're liars. They lied about tapering. They lied about the duration of 0%. They lied that QE would be one and only. They lie about economic growth. They lie about price inflation. They lie about the labor market, job creation. They double count jobs. They lie that QE is stimulus. They lie about everything. They told us that they had 80 billion a month in stimulus. It's not stimulus, it's capital wrecking ball. They told us it was 80 billion a month, but they don't tell you about how they're backing up the derivatives. So I think it's more like about maybe 200 to 300 billion dollars a month. That's what I think it is. And it sounds like a crazy number, but notice that their number of 80 billion or 50 billion or 45 billion, it doesn't include everything. They try to delineate the treasury bonds, and they're trying not to talk about the mortgage bonds. All right, maybe they've processed a bunch of them already, and they might be close to finished, but I doubt it. I think they're left with a lot of leveraged mortgage bonds, these CDOs, collateralized debt obligations. They're leverage squared. They've got a lot of rubbish that they're redeeming for Wall Street benefit. QE has a better name, Elijah. It's a backdoor Wall Street bailout that the whole world resents. So I believe we got evidence of the failure for QE is the money supply having gone down fourfold since 2009, while the money supply has gone up 3.5-fold. All right, they call it stimulus. They realize things are slowing down, so they give you more stimulus, but it's not stimulus, it's a wrecking ball. So that's why I think we're guaranteeing a failure, a systemic failure. I think we're guaranteeing that we're going to get a breakdown in the system with bonds, government debt, with the currency, the dollar, rejection, and economics. The economic structure of the United States is completely falling apart. These derivative accidents are coming. And the low bond yields, by the way, they slow the economy. I mean, just talk to some of the elders that you know and ask them, how are you doing with your bank CDs? Well, gee, I'm not earning any interest on them. And to be honest, I have to cut back. I couldn't go visit my relatives in Florida because I didn't have the money because I'm not earning anything on my CD. I hear that from my father. I try to explain to him, you got a bunch of CDs, Dad, but you're not earning any interest. Meanwhile, inflation is raging. So you're losing money in a real sense, a real value sense. He says, yeah, but I'm not going to change anything. All right, people are stuck in their position. The only stimulus out there from QE is for speculators and for dead insolvent banks who really like the carry trade. Look, they got a guaranteed win. They borrow at the 0%. They buy long-term bonds, either the 10 or the 30-year. They put on leverage, and the Fed guarantees them with a wink. Don't worry, it's going to continue. Don't pay any attention to what we're saying to the press and saying to the public about tapering. No, don't worry about that. We don't want you to start selling in an avalanche and unwind your carry trade. So don't worry, everything's going to be fine. We're going to continue this for a long, long time. They're stuck. The big banks don't want to lend money to commercial clients. They don't want to lend money for the consumer, but they'll do some just to keep this thing running. Oh, guys, it's so pathetic. So money is leaving the system here, Elijah. Capital is being retired, but money is leaving the system, chasing gold. We're having record weeks here with gold and silver coins from the U.S. Mint. But an unfortunate thing is happening as people take different options. They're saying, gee, I don't want a CD. It doesn't pay me anything. Let's go get a few more percent with this junk bond or this muni bond or this other concocted bond that the Wall Street is selling, but it's got much higher risk. We're getting a repeat of 06, 07 with the subprime. We're getting a repeat. We're in worse shape now than before Lehman as to the debt situation, the leverage situation, and the insolvency. People are chasing yield just like they did those fractured subprime mortgage bonds where they lost 30 to 60%. They were chasing yield, and they lost their principal. This is not going to end well, and I think it's going to end soon.
And you've mentioned that another thing that is leading to systemic failure is that the U.S. is experiencing an increase in the money supply at the same time we're seeing falling money velocity, which is basically the speed at which money is changing hands. So how does this translate into systemic failure?
Well, how slow can the money velocity go before it pretty much is evidence of a flat line of a guy in the emergency room? I don't have the answer to that, but I think we're perilously close. Look at all the shut down stores in the malls. Look at the complete brick wall that the car sales have hit. If they've dragged from forward sales to make them current sales, and now there's no future. Just look at all the different evidence of tremendous pain. I don't have, there's no precedent for this kind of situation in the history of the United States where we're expanding the money supply so rapidly. It used to be before 1994 that we would expand the money supply in sync, in accordance with economic growth. So what we're seeing now is a recession, and don't believe it, right? I mean, it's problem for the moronic masses when they talk about economic growth and the sluggish recovery. Now we're stuck in a -4 to -6% annual recession every single year. We've got tremendous depression, fierce recession, if not depression, in progress right now. So you've got this deep damage, and it just can't be sustained because we're expanding the money supply huge, even though we have no growth. We're going backwards in economic growth, and we're going into, high gear, unprecedented high gear for money expansion. The old rule in classical economics, which is valid economics, not Keynesian crap, is that you cannot expand the money supply above and beyond economic growth. Otherwise, you cause asset bubbles. The asset bubble now is with the Treasury bond, the U.S. Treasury. The asset bubble is with the U.S. stock market, the entire market. The asset bubble is a strange, queer thing called the banking derivatives, which, we've talked about some, and it's very hard to say, well, its values are going out of sight. They are going out of sight because the money feeding into them is going out of sight. We've got a breakdown going on. It's like you're hitting the accelerator and you're going backwards faster. That doesn't make any sense. We've never seen this before, Elijah. So you can't say, well, we're going to increase the money supply another 100% based on the base of 2009, and that ought to fix it. No, it's going to slow it down further. At what point is it slowed down so slow that it causes systemic failure? Well, how about the 24% unemployment? How about the, 61% something, 61 point something percent for participation in the labor market? What's dead zone bottom? I don't know, 60? My gosh, we got 39% of the effective labor force not working. We don't count a lot of them as unemployed. We only count 24%. I mean, these are breakdown figures.
In your article, you talked about what the logical conclusion is to all of this. Did you want to expand a little bit more on what you see coming?
Well, we're going to get some extreme events. To put it in medical terms, the dollar represents a contaminated blood system within the economic capital body. The U.S. government is attacking any nation that resists U.S. dollar usage and trade. We saw it with Iran, and now we're seeing it in spades with Russia in their con game regarding Ukraine. U.S. attacked Ukraine, blamed it on Russia, slapped sanctions on Russia, and Europe is awakening to that. Eventually, the U.S. Fed will push the QE volume of bond monetization to multiples higher to cover the discarded U.S. Treasury bonds because the world is rejecting the dollar. And as they reject the dollar for trade settlement, they will not have as much need for the treasuries in their banking systems held as reserves, reserve assets for their banks. Just think of South Korea. Are they going to hang on to their treasury bonds in their banking system as their foundation reserves? Well, if they don't need them for crude oil and other big purchases, no, they're not going to. They're going to be diversifying. So as the U.S. Fed is forced to ramp up in a huge way the coverage for all the dumped treasury bonds out there, we're going to have a twin problem that won't be easily resolved. How will the U.S. economy be supplied for imports? I'm talking about not just energy with crude oil, not just home electronics, but automobiles and a lot of different things in the economy. If the world is not accepting treasuries and the dollar for trade, then how is the U.S. going to be supplied for all their import needs, which is 40 to 50% of the supply chain? It's going to be a new dollar. It's going to be what I call the Scheiss dollar, and Scheiss is German for shit. So it's going to be the new Scheiss dollar, and I'm hearing that it's going to have a blood red color, which is very appropriate for the Satanists who are running Wall Street and most of the U.S. government. It's going to be ugly. The new domestic dollar, they're calling it the Treasury note as opposed to the older Federal Reserve note. It's going to be rapidly devaluated. I'm hearing 2 steps of 30% devaluation. If you get 60, compounded, it's more like 65 or so percent. If you get a 65% or more devaluation, you're going to get a 200% increase in import prices. 200%. So this is what's coming when the U.S. government sees the rejection of the dollar and has to do something to assure their supply chain continuation for imports. Huge price inflation on the imports. As much development of domestic sources as possible, and it's going to be too late because the capital game is being ruined by QE. We're going to see price inflation, huge shortages in food, gasoline, and cash, like ATM machines, and civil disobedience, civil unrest, social chaos, people hitting the streets. And what you're seeing in Hong Kong now with demonstrations, that's coming, I think, to 10 or 15, maybe 20 American cities.
In your article, you also talked about a return to a gold trade standard, and I know we've talked a little bit about this before, but did you want to expand on what you think the consequences would be to the global banking system using U.S. Treasury bonds as reserves?
Yes, I kind of covered that as I went long-winded on the previous one, but as you get the global dollar rejection, it has enormous consequences. U.S. is going to see the dollar not accepted for trade. The U.S. is already seeing third parties not using the dollar for settling trade. For instance, between China and Russia. That's an obvious one. Another one is between Russia and Iran. They're not using the dollar. Another one is India and China. They're not using the dollar. I think you're going to even see China and Australia not use the dollar. They've got extensive Chinese yuan swaps in place, facilities in place. So as very little global trade is conducted in dollars, there won't be as much need for the global banks to hold treasuries. And as they dump the treasuries, the Fed is going to be under pressure to cover those dumped treasuries. We're going to see the Fed covering a great deal more than just the U.S. government debt, which is another lie. We had a statement a couple of weeks ago that just something like $570 billion was the deficit for the fiscal year of 2013. Well, what a grand lie. They had all kinds of adjustments in there. I got news for people. You cannot do adjustments on a full year. There's no seasonality in the full year. It's all internal to the year. If you just look at what was the debt at the beginning of the fiscal year and what was the debt at the end of the fiscal year, gee, a rocket science concept here. Well, it's a 1-point-something trillion dollar difference. Yet they called it 570 to fool the idiots out there. And to fool the people, well, no, to supply the people who like to continue in fooling the people. They want to supply Wall Street with some data that they can send to their client base and say, look, the Treasury debt, the U.S. government debt is improving. It's improving. It's narrowing. It's good news. Yeah, we're really right. It's $1 trillion bigger than the previous year. So where's the reduction in the deficit? No, what we're going to get is a major blow coming real soon. We've already seen the Russians and Chinese announce that they're not going to be using the dollar. It's far more than just their energy trade and pipeline. The pipeline construction between China and Russia and elsewhere, like to Japan, the Gazprom pipelines, they're going to be financed by treasury bonds. I mean, it's not only that they're going to use different currency like yuan for their settlement of trade between Russia and China, they're actually going to dump the US dollars to build it. A big blow is coming. The Saudis are very soon going to say, we don't necessarily require dollars for crude oil purchases. It's okay. You got, British pounds or euros or Swiss francs or yen. It's all good. You want to use South African, rand. It's all good. Brazilian real. It's okay. We'll take them all. And once they do that, once the Saudis say non-dollar is okay for settling in oil purchases, you're going to see a massive amount of dumping of treasury bonds. And the Fed is going to be compelled to soak them up. This is the soaking up process that I referred to before. They're going to have to ramp up their QE to cover the foreign dumping. And then after Saudis announce that, all the other OPEC nations, especially the Persian Gulf nations like Qatar, UAE, Kuwait, Oman, Bahrain, they're all going to say, we don't necessarily require the dollar for oil purchases. So all their customers are going to say, oh, same thing. We don't need to hold on to these treasury bonds so much. Then you're just going to get a second wave of giant volume that the Fed is going to have to soak up. The Fed can manage the dumped treasury bonds. The Fed cannot manage the import supply chain. Nations of the world are going to say, we don't want your treasury bonds anymore for these finished products and raw materials, commodity. We're not going to supply the U.S. economy with finished products and raw material for treasury bonds. We've done it for 30 years. And it's one of the biggest frauds in the history of mankind. We've exchanged $4 to $5 trillion worth of finished products and raw materials coming into the U.S. economy, paid for by fraudulent treasury bonds that we have no intention of redeeming. We're covering them with hypermonetary inflation, and the world is objecting. The world is not going to supply the U.S. economy with its imports any longer, starting real soon. And I don't have the exact date. We're moving toward the point of breakdown. The BRICS are then going to turn around and say, we've got a gold trade standard here. We got some gold trade notes you can use as letters of credit. You got to put up the gold collateral. And by the way, all this time we called it a BRICS Development Bank. Well, we gave it a wrong name. It's more like a BRICS Central Bank. And it's backed with gold. And it's backed with more gold than Fort Knox ever had. So the BRICS are going to bring in a new gold-backed currency to work side by side with their gold trade note used as letter of credit. It's going to force tremendous changes with the global bank reserves. They're going to start moving out of the treasury bonds, and that'll be the end of the American empire. The United States is going to be humiliated to produce its own shice dollar for domestic purposes. By that I mean it's not going to be a global currency. It's going to be a U.S. currency finally. What kind of standing and merit on the fundamentals does the U.S. have for a new currency? Trillion-dollar debt, dependence on a printing press to keep it financed, huge imports, insolvent banks, and an infrastructure that's kind of bad shape, and dependence now on shale oil and fracking gas. The fracking gas destroys the groundwater system to contamination, while the shale oil business has a pretty poor energy return on investment, like 3 times worse than the traditional, conventional oil business. So the gold standard's coming back. It's not going to be led by the U.S. The U.S. will be left kicking and screaming, and I think it's going to lose its entire Western European group of allies. We got an end game coming here, Elijah, and I think we're in it. And I think I've got a pretty good indication based on some comments from The Voice and some debate that we've had for a good couple months in my team. I don't know what to call us. We're just a group of guys who are, I think they're all bright. Some of them are brighter than me, and I have no problem in inviting them to be on my staff of trusted colleagues for chewing things over and trying to make sense of what's going on. But I got a pretty good idea of how this is going to conclude, like the triggers. Okay, we've been talking for quite a while that the U.S. banks and the London banks and, their key Western European allied banks, they're going to suffer a big event, a contagion failure event. And I thought, even The Voice thought 2 or 3 years ago, he said, you're going to see an important intermediary bank, a mid-sized to somewhat large bank, an intermediary bank fail. And it's going to have consequences for its like, think of it as parent bank, more senior associate bank, the reverse of intermediary. And it would cause some bank failures, and it would lead to a contagion. One would hit another. And notice, for instance, that when the Portuguese bank, Banco Espírito Santo, entered a failure, you had a lot of groans from some big French banks. Okay, here's why that sequence is not going to result in the breakdown that we're anticipating for the system. We're going toward a breakdown. There's no doubt we're going to get a breakdown. So the big question is, how is it going to happen? Well, they came in and patched up Banco Espírito Santo in Portugal. They patched it up. They had some nasty events. The credit default swap owners, the bond insurance holders, some of them got screwed because of the fine print of the derivatives, which are very imperfect entities. I don't want to get into their imperfections because I'm making a point here on Endgame. But BES in Portugal, the big bank, it's one of their 3 big banks. It did not go down. It did not cause a contagion. And we saw once again how the central banks teamed together to make sure that it wouldn't fail. They patched it over with junk, with phony money. Okay, Draghi at the Euro Central Bank, he's got some official junk patches, LTFO, long-term finance operation. He's got some super senior junk bonds that he claims that he could just dictate because he's Prince Draghi. He could just dictate that this new bond is senior to sovereign bonds. Wow. So the European Central Bank has more power than all the nations under it. Right. Well, the German High Court is slamming them down and saying that they're illegal. So these patches are not legal, but they're still being applied and they're preventing the failure. So where is the vulnerability? As we've been saying in the gold community for a long time, the vulnerability comes when they run out of gold to continue their games. If they don't have any gold, they can't supply it into the market as a basis, highly leveraged. Like right now, 100 paper ounces of gold support 1 physical ounce of gold. By that I mean you take the full amount of gold out there in physical inventory sitting, say, in the COMEX or in the JP Morgan vaults. Take that whole gold volume. Well, what's the volume of all the paper gold contracts out there from their naked shorts, which mean they sell gold and never deliver on it and knock the price down. This is an indescribably corrupted market, one of the most corrupted markets in the history of mankind, side by side with its nemesis, the treasury bonds, one of the most corrupted markets in the history of mankind. So the vulnerability is the gold market. In Shanghai, they opened up, I think it was about a year ago, maybe a little more, they opened up a gold exchange. And it's been trading briskly, and a lot of attention has come to what's the difference between the gold price in Shanghai versus the gold price in New York and London, and that premium has been monitored closely. Well, now a big event has taken place. September 22nd, the Shanghai Gold Exchange opened up, and they are actually settling in gold. They have gold contracts settling in gold. They have silver contracts, futures contracts settling in silver. They're settling honestly in the metal. Well, they're running out of silver, and they're very low in gold. And the rumors are out there that the Chinese are going to pull the plug on all the different futures contracts that they're holding in a long way, meaning they're the holders for delivery. They're not the naked shorting pouncers on the gold price. They're the buyers of gold with long contracts. The rumors are that the Chinese are going to call them in and wreck the system, but I don't think that's the way it's going to happen. I don't think that is how it will unfold. I think instead, this is handed to me on a platter. I'm very grateful for the Voice, who's a brilliant man, very well connected, a generous fellow, a witty fellow. He said, no, what China's going to do is very clever, very indirect, an assault on the Western financial system, but done in a way that they will never be harshly criticized. It's not like they're going to Chinese, okay, here would be a harsh way. Oh, they just pull the plug on a couple of big European banks and, close the door on a London bank and just force them all into a failure like JP Morgan and Goldman Sachs did to Lehman. That's a dishonorable way. They're not going to do that. What China's going to do instead is just to say, we're repricing the gold contract. We're repricing it at, I'm just going to make something up because I'm being told at least double. We're going to reprice the gold price. We're going to reset the gold price to $2,800 to $3,100 per ounce. We're going to reset the silver price to $50 to $60. That will alter the ratios nicely. They're extreme, the gold-silver ratio. And with this, let's just call it 3,000 gold and $50 silver. With these new prices, the New York and London folks are going to go into a panic. And they're going to say, what are you doing? This is ridiculous. The world should not pay any attention to what Shanghai is doing. And Shanghai is going to say, F you, New York and London. This is the gold price globally. This is the silver price globally. If you don't like it, then arbitrage it. Take all your ample gold supply, acquire it in London, and sell it in Shanghai. If you have any. The reason they're going to do this is that London doesn't have any. I was told by the Voice that a team of very old Chinese families and other Asian families have been draining 1,000 tons of London gold per month since March or April of 2012. I can't remember the exact start date. We're talking 30 months later, 30,000 tons of gold have been removed from London, which I believe has been supplied by Basel, Switzerland, and the Vatican to some extent. So the point is the point of purchase, the point of draining is London, but it's being supplied. So it's like the whole Western system is getting a blood drainage from the artery in London. All right. They don't have any more gold left. They've got minuscule amounts gold left, or Basel has said, we're not going to give you any more. We're not going to lend you any more, lease you any. Vatican might say, this is the end of what we're willing to do. China, I think, is realizing that this endpoint is approaching, and they're about to reset the gold price to double and reset the silver price to triple. As they do so, they're going to invite London to arbitrage it. They won't be able to because they don't have any gold. They won't be able to because they don't have any silver, not for a long time. And then comes the derivative problems for the West. London is going to have to admit we're seeing a crisis in the Forex derivatives. They link the major currencies to the gold price. Well, if you reset the gold price to double or more, then what you're doing is you're altering the gold-dollar ratio. Well, there are derivatives that are involved with that, big contracts. This is how they suppress the gold price. So the shock wave will just slam the Western financial structures and put them into a panic. They will call the Chinese criminals. They will call them disruptive. And the Chinese will come back with their honorable statement. Unlike JP Morgan and Goldman Sachs in the Lehman era, the Chinese will say instead, we just want a fair gold market. We just want a fair silver market. Deal with it.
Right. And I mean, right now, as we've talked about, it seems like the gold and silver markets are not fair. It seems like they're being suppressed. In the past couple weeks, we've seen the precious metals seem to get smashed. Silver is actually around $17 and gold is around $1,200 now. What is your perspective on why we've seen gold and silver go down significantly in the past couple weeks?
To support the dollar, as we opened the discussion with. Slam gold, keep the dollar lifted. Slam gold, and keep the treasury bond elevated, the biggest bubble in the history of mankind for assets. This is going to go down in the history books. We're seeing the end game, and I don't think we're at the beginning of the end game. I think we're in some early to middle stages of the end game. I was told that the entire Ukraine war was brought about because the U.S. resisted precisely this sort of thing that was going to be done with 50 nations. 50 nations agreed to a currency reset. They didn't want to say a gold standard return, so they called it a global currency reset. The global currency reset was going to cause a doubling in the gold price, but we got the Ukraine war instead. So the U.S. had a trump card they played. They basically slammed their fist on the table, and all the contracts flew to the floor. And I learned something else in conclusion here, Elijah. Why did Germany in 2011 demand a repatriation of their 330 tons of gold from the New York Fed? Why in 2011? Why then? I think I know the answer. It was provided to me from The Voice, who has some German contacts. He has a lot of contacts in Central Europe. Apparently, in early 2011, the U.S. government, State Department, and probably military entities, who knows who controls whatever in the U.S. military anymore. I think it's Langley. I think we've got not only a narco government at the executive, I think we've got a narco military with the Joint Chiefs. I'd like to see them a little more honest, but I don't think they're going to defend the Constitution. Anyway, back in early 2011, the U.S. government gave a briefing to the German government of their plans 2 to 3 years later for Ukraine. This was in 2011. The plan was to capture Ukraine, divert and obstruct Russian energy supply, and prevent a merger of Russia with the grand Eurozone. Prevent the Eurasian trade zone from coming to be. Just like George Orwell talked about in 1984. Eurasia versus Oceania. US and Britain, remember, we rule the waves. Churchill even said, no, we're not part of Europe. We're part of the ocean. There's your comment. I mean, that's George Orwell's concept. So the Germans heard that the U.S. wanted to interrupt any joining of Russia with Europe, wanted to obstruct the Russian energy. And the Germans said, are you out of your minds? We want our gold back, you fools. Okay, that's the proximal cause for the Germans requesting their gold back. Okay. I mean, we got a lot of hidden motives here. Why did the U.S. grant most favored nation status to China in 1999? Because it was part of a massive gold lease to continue the game. These things have background, hidden, proximal causes that we're not told about. Why was Kennedy killed? Because he wanted to go back to the gold standard, silver certificates. Why was Garfield? Why was McKinley killed? They wanted to go back to the gold standard. Why was Lincoln killed? He wanted not to use London bankers to fund the Civil War. Instead, he went to the greenbacks. This is sad what's going on. We're in an end game. You cannot have in the COMEX what has been going on for 2 years to continue much more. They forbid gold settlement, delivery of metal bars for gold futures contracts. They've been forbidding them for 2 years. If you don't like it, what they have instead is cash settlement, cash equivalent. Well, they set the price and they give you the cash. So they're cheating you, they're defrauding. on the settlement for the contracts while they're defrauding on the price of what they're settling. If you don't like the cash settlement for the COMEX and you make a big deal out of it or you file a lawsuit, they'll ban you from the COMEX forever. And you can't participate, say, in crude oil contracts or copper contracts or, who knows, aluminum. Now, this is an end game. We're reaching the very end, and you're going to get some consequences because foreigners are not going to supply the U.S. economy with imports in exchange for treasury bonds, while the dollar is just not going to be used much in global trade. These are end game traits. They're huge billboards on the end game. And I think I'm in front of a few things. I'm very fortunate to have The Voice and a couple of other really strong sources. Two former London bankers are on my team. One's still working in London, one's moved on, he's working elsewhere, but tremendous experience and contacts and ability to perceive what's going on, to read what's happening. One of them told me about the Belgian bulge. He said the Belgian bulge, which shows a huge $400 billion increase in treasury bonds, that's the BRICS posting their treasury bonds for sourcing gold for their central bank, the BRICS central bank. There's a lot of hidden things going on, and I try to uncover them and put them all together, and I think I make pretty good sense of what's happening. It's not easy. Many other newsletter writers are focused on the COMEX, and their second focus is on the COMEX, and their third focus, and they're missing a lot of what's going on about the Eastern developments. I mean, guys like Paul Craig Roberts, they're really astute in noticing the details and fractures of the U.S. foreign policy, but he doesn't have a clue, doesn't have any information at all about Eastern alliance with the formation of the Eurasian trade zone of Russia and Germany coming together. Germany's already decided they're going to work with the BRICS. They're going to abandon the euro. They're going to go straight to the BRICS gold currency. They're going to bypass any Nordic euro, an honest euro for, say, the healthiest of the European nations. I was told in 2009. This is something The Voice had heard, and he thought it might happen, but they're going to skip the Nordic euro. The four nations involved are Germany, Austria, Netherlands, and Finland. They were going to break away from the euro and say, you know, the South, you can go to hell. You're all broken and bankrupt anyway. We're not going to support you anymore. Well, they're not going to do that. Those four nations are going to embrace the BRICS. They're going to become BRICS associates. They're going to adopt the gold standard, the gold currency, and engage in gold trade. I mean, gold trade settlement with trade. They're going to settle their trade, you know, bilateral trade, two nations, in gold. They're going to use intermediaries for gold. They're going to put up letters of credit in gold. We got to return to the gold standard. The U.S. interrupted it with the Ukraine war in February, and my forecast, new one, it's a revised one because I was wrong in my June forecast of a Ukraine collapse. My new one is December. Their harvest is going to be a failure. They planted 80%, but I don't think they have the diesel. I don't think they have the trucks. I don't think they have the farm equipment. I don't think their roads are ready. Too many broken bridges and highways that are disrupted. I don't think the men are available. A lot of them are dead. I think we're going to see a failure in Ukraine. We've already got a truce between Ukraine and the UE. The U.S. tried to interfere with it. Merkel and Putin engineered it. So this is another end game that the U.S. is just getting blocked everywhere they try some of their insane, violent dollar defense and foreign policy. We're in the end game, Elijah. It's not going to end pretty, but it's going to end very favorable for gold. I'm really looking forward to the reset of the gold price and silver price. I'm really looking forward to more London and New York bankers flying out of windows. I'm really looking forward to insolvency being declared as bankruptcy for London and New York banks. I'm really looking forward to the end of the dollar, but I'm not looking forward to the consequences of the new Scheisse dollar. It's going to have its satanic symbols, to be sure, just like the $1 bill has. The pyramid with an eye is a Masonic Satanist symbol. There are more symbols in there, like 13 bricks. 13 bricks are the 13 houses of the Masons. They like to give their symbols in front of your face and tell you that they don't mean anything while they smile with each other. We got Satanism laced through the entire U.S. government and banking system and energy industry. This is not mild stuff. It's now laced through the Hollywood music industry. Satanist symbols. It's sickening what's going on. We're at the early stages, middle stages of the end game. Don't be distraught by the low official gold price, because if you want to buy, say, $30 million worth or $150 million worth of gold, you're not going to get it at 1,200. You got to pay up. What does that mean? It means their price is false. Doesn't mean anything. I don't care what their COMEX price is. I don't follow it. Honestly, every 2 or 3 months, Elijah, I check what the gold price is. I'm busy working on what the Eastern Alliance is doing. I'm busy looking at what the BRICS nations are doing. I'm busy looking at how Ukraine is not going the way they want. I'm busy looking at the Gazprom. Serbia just announced today they're going to continue with Gazprom's South Stream pipeline, even though pressure from the U.S. government to block it. We're pressuring Serbia. U.S. is pressuring Poland. U.S. is pressuring Bulgaria. U.S. is pressuring Hungary. They're all going to give lip service to the U.S. while they continue with the Gazprom pipeline called South Stream, which works around, it skirts around Ukraine. It's the Kremlin Gazprom plan to get around, to circumvent the fraud, incredible fraud and siphoning thefts by the Ukrainians. They got 3, 4, 5 months of underground supply, and much of it is stolen. Russia doesn't like it anymore. We get so many pressures in this end game that I think we're actually in the end. This is the end of suppression for gold. The liberation of gold and silver is coming. It is now visible.
All right. Well, Jim Willie, thank you so much for joining us today and sharing your insights. Did you want to share with the viewers where they can find you, and if you had any last thoughts you'd like to add?
I don't have any last thoughts. I just invite people to go to the Golden Jackass, www.goldenjackass.com website. There's a lot of free material in there for newer folks. For those who've been well along in this battle, it's like we're warriors. I call some of us jackass wannabes. It's kind of silly, but we're gold warriors. There's a lot of free material in there. I have the most recent public articles, which are fewer in number because I'm doing more interviews. I'm getting a lot of invitations. I actually have to turn down some of them. I won't go into reasons why I choose not to do certain and to continue with others, but I will say that I'm really happy to see what's going on with your website. I think it's called Finance and Liberty. I'm really happy with that. So the free web page on goldenjackass.com website has the free articles and links to podcast type interviews. There are a lot more interviews lately and a lot fewer articles, but that's okay. It's okay. It just means that my message is getting through and being accepted more and being realized as high reliability, as opposed to some of the junk forecasts that you've had all over the place. So the hat trick letter is the product. It's what I'm selling. This is not exactly shameless promotion of the hat trick letter. It's I think a generous promotion of the hat trick letter, where I not exactly donate, but I explain a lot of things to listeners. But I invite people to sign up for the hat trick letter, which has 2 monthly publications: the higher level global currency war. I got that wrong. The global monetary war. You hear global financial crisis. Okay, I cover that. It's the report is the Global Monetary War report. High level things, big battles, high level. And the other report is the gold and currency report, which is lower level battles, street level battles, like, coin demand and a lot of things like that. Competitive currency devaluation, central bank stuff. I have central bank topics in both reports, but the higher level things in the money war report and the lower level in the currency report. So I invite people to go and learn some more, check out some other interviews, sign up for the newsletter. I think you'll be amazed at how much detail is in the newsletter. There are a lot of work. They're easily 2 sets of 50 hours per week. A lot of lead up time. I spend a lot of time on each report. There are 100 hours of work per month for the pair of reports. And I'm working right now on the October reports. So as I put down the phone here, I will be working again on my report. Today, Serbia announced a continuation of Gazprom's South Stream pipeline. That's a story that I'm integrating right now, right before I took the phone call. So there's a lot happening every single day. There's an acceleration of events. And one of the hardest things, Elijah, for the writing reports is, well, what do I omit? What can I not include for space limitations? Well, I try to make occasionally a new special report and take something out, but only for standalone kind of topics and stories and analysis. So I invite people to go to goldjackass.com, read around, sign up for the newsletter. You'll be very pleasantly surprised. And take a look, for instance, if you're on the fence, take a look at the forecast web page. I got a button for it. It's lots and lots of very important, critical, correct forecasts. I got a couple things wrong, but I got over 20 things right. And I think I'm running well over 80% on correct forecasts. I missed the Ukraine failure in June. I have to update that. So I got 3 failures, 3 wrong forecasts. It's very intriguing what's happening. It would be more fun if it weren't so tragic. I'm amazed that so many Americans are still walking in a fog. Many are realizing that something's wrong. They can't put a finger on it. They don't realize that the chemtrails are for genocide. They don't realize that the Fukushima was an intentional event done by the U.S. against Japan when they wanted to work on a regional non-dollar currency. They don't realize that the California drought is engineered. The Doppler graphs show streaks like walls. Those are not natural. They don't realize Hurricane Sandy in 2012 was fabricated. We watched its fabrication done by the Dutch Rinse engineers. The observation was done by the Dutch Rinse engineers. The actual HARP event was done by the U.S. boys. We saw that starting in March and April and May. It built up. The plans were building up, and the actual storm was formed in August. We watched its microwave developments, evidence. Microwave is not natural in hurricane development. It's man-made. So a lot of things going on. I cover some of the nasty stuff. I try to touch on them and move away and stick with the banks, the economies, the energy world, the gold world, the currencies, central bank policy, and all that. So, all right, well, it's good being on, Elijah, and as always, we covered a lot of good ground.
Definitely. Thank you once again, Jim.
Okay, my pleasure. Bye now.
This video was brought to you by ReluctantPreppers.com. Click here to watch Reluctant Prepper's latest interview with expert off-the-grid medical doctor and founder of a thriving survival compound, Dr. Jay Nielsen of Wellness RX. Nielsen joins Reluctant Preppers in this episode number 1 to reveal the essential family medical emergency supplies you must obtain to keep your family safe in an extreme situation. Now, a clip from the interview.
I mean, I have a lot of things down there. I have an entire welding lab. I have an entire grizzly wood shop. You know, I have everything I need to run an entire city. Okay, you know, I've got 300 solar panels and, you know, power supplies and 50,000 gallons of roof water storage and 14 miles of fence and 40 acres of drip irrigation. Okay, I'm ready to farm, feed myself, protect myself,